Hey there, how you doing? Welcome back to the channel. So today I'm going to talk more about the GameStop situation, and just I don't know why, but yeah, because it's very interesting to me. Uh, so what am I talking? Oh yeah, so I want to talk about this. So there's been, obviously everyone's heard about this situation where basically, the little guy traders on places like the rHood and stuff like that are getting themselves in, have been, you know, apparently have been discussing online social media, some Reddit group that, discussing like, hey, we're going to go buy some stocks that are heavily shorted. And by doing this, they've pushed up the price. So it's rather amazing how much they've pushed up the price. I mean, they took a stock, GameStop, this stock, and they've took it up like literally hundreds of dollars in a matter of days. And so what happened is one of these online trading platforms, Robinhood, basically came out and banned buying the shares or limited buying the shares to just a few. And of course, this kind of pisses everyone off. And so really the question is, well, why are they doing this? Why are they limiting the shares? And so now it sort of turns out as things are going on, it's sort of coming out that, well, it's kind of more complicated. It's not just so. It turns out that apparently they are getting requests to have basically, to put up large deposits at a clearinghouse. And so what's happening is that this is why that they're saying that they are, preventing buying the shares because we, don't want to have to put up that money. Well, what's really going on is you can read between the lines, in the interview with the CEO of Robinhood was kind of pretty damning, I think. And other people have talked about this. It's kind of like, okay, so basically you have a liquidity problem. At the end of the day, all the excuses, everything you're saying, at the end of the day, you have a liquidity problem. If more people on your trading platform buy these heavily shorted stocks, the clearinghouse or the company that's helping clear these trades is requiring 100%. When you go to buy it, they're requiring 100% of the money. So if, a million people come in and buy the shares, they are asking for you to, the company to put up 100%. So they don't have the money. So it's really simple. It's very clear. And he really made it very clear. It's like, well, we don't have the money. Oh, so there's no liquidity event because, because we prevented that by moving quickly because we don't have the money. We don't have enough money. We had to go out and raise emergency financing. Why? To shore up our balance sheet because we don't have the money. So what's interesting now is this is kind of something. So now all of a sudden, and like I talked about before, it's like, well, how do they make money? They don't charge you money for trading shares. And I know people don't know this anymore, but back in the day, it used to cost you hundreds of dollars. I mean, this used to cost you 1% to trade shares. And so it wouldn't be unusual for even at reasonably small amounts of share trades paying $50. So it was significant. And then, you had the online brokers who still charged you, but they basically, you did everything yourself, like, Schwab, TD Ameritrade, Scottrade, which got acquired, and other companies like that. And, but now you have these guys, and this isn't new in terms of, yes, there are other brokers around that charge nothing, but they have to make money somehow. And so that's always the question, like, well, how do they really make their money? And, in this case, they're doing it somehow by selling order flow or something like that. And, they're basically selling your information. And like I was speculating before, and this is speculation, we know that this type of thing where, the high-speed traders can get access and views of orders before you do. And this makes perfect sense, as this is how they make money. They sell the order flow off. And basically the people that are going to, high frequency guys are going to come in and they're going to make money on your trades before your trade even executes. They'll be in and out of it however many times they need to be to just make some money on all the little fractions that are in there, right? So that seems pretty clear. That's kind of something like that is going on, right? That's how they're making their money. And so now, speculation on one side is that, well, they are, part of the reason they stopped the trading is because it's pissing off the people that they work with, basically because these hedge funds or whoever that they're working with are, losing a bunch of money on the shorts. Well, that may be one aspect of it, but it really seems, the fact they raise money in the comments of the CEO, it sort of really leans more heavily towards it being a liquidity problem with this broker. Like apparently it's as far as like his indication is, his indication sounded to me like, hey, well, we acted quickly to prevent any liquidity problem. It's like, that's what it implies to me. So it's like, okay, so that means you have a liquidity problem. I mean, you can't prevent a liquidity problem. So now going forward, so let's go forward now. So now this is all in the past, and we're going to have the market open up tomorrow. And now it's going to start getting interesting because basically people are closing up their rHood accounts. People are pissed off. And now we have a really interesting situation because like 100,000 one-star reviews like got removed by Google. But the point is, like, it seems to me very likely that a bunch of people are going to pull out of that app, right? And they're going to all pull their money out. So now you have a company that already has a liquidity problem, had to raise emergency funding. Now they have another liquidity problem. Like they don't have the money. Like you deposit a couple $1,000s in a brokerage. It's just a lot, they may or may not have the money. And so now they're going to have to come up money to basically meet all the redemptions. Basically, as people close these accounts, they're going to have to do that. So now I'm really starting to wonder because I've been looking at this market, been like, hey, I'm just a long-term guy. So I'm just like, hey, from my perspective, it seems like, look, this is going to be very easy with the money. There's going to be more stimulus. All this stuff will just lead to more the market continuing to just run. But now it's a kind of interesting thing because I'm starting to wonder what's in the corners, what's in the dark corners that are happening here. Because think about it, like if this company goes belly up, like if they end up going belly up, which could happen very quickly, these things happen very quickly. Like if that happens, like although it's a small, tiny, crappy company, AKA that's why they're having liquidity problems because they're a small, crappy company. And then it's kind of interesting. I kind of trade with other companies that are like charge me a little bit of money for trades and stuff. And it's like, you kind of think to yourself, well, am I being a chump for doing that? Shouldn't I just go to one of these ones that charge me nothing? And well, maybe not, because in a way you get what you pay for, right? You're basically, if you're one of these companies and you're trading and you're doing this stuff for free, they have to make money somehow. But it seems very clear that potentially, and this is speculation on my part, I'm not a financial advisor, I do not know, that it may be that they're having liquidity problems, meaning they don't have the money. They went and raised money quickly because they didn't have the money to meet the requirements, the deposit requirements on the trades. And you know what? It may not be done. It's really interesting because like in some of the other market crashes you've had and financial crises, it wasn't always easy. Like when you look at like Lehman Brothers folding and stuff, well, what was going on there? Well, what was going on? When you look at that, what the heck was going on? Well, one of the things that was going on at a certain point, they lost confidence. Other companies on the street lost confidence and they were pulling their money, and that creates a liquidity problem. So now you have a company that's already got issues and now people are pissed off. And now I would assume and speculate that a lot of people are just going to close their accounts and like, give me my money. And I'm starting to wonder, I'm really starting to wonder, like, hey, is this going to be like a problem? Like, are they going to basically have to go and we're bankrupt? And the consequence could just spread like wildfire because basically when what happens in the markets is like, it's all about the system. It's all about, hey, is the system that I'm in, is the system okay? Like, people, when you trade stocks and stuff, you can deal with, oh, I made I made a mistake and lost some money. I had bad trade. Everyone can deal with that. But the part that people can't deal with is like, hey, I made a good trade and yet I lost all my money because the broker went belly up. That's the thing that people can't deal with. And that's my concern. So hopefully this doesn't happen. Obviously, this is a speculation. I'm not a financial person. I don't know. My only, I'm wondering if, like if this broker does fold, if they do, my concern would be, is it going to spread? Because it's, once it starts at one, then it's going to, it can easily turn into like, well, hey, wait a minute, this particular broker wasn't good. Are there any other that are in great shape? And then I don't know, does it go to like some of the other ones, Webull or all these other little ones that are apps? And the question then becomes, well, gee, all these little crappy broker companies that are apps. And this is the thing with you bloody millennials. You guys are just like, you people just, you don't understand. You're just like, you want everything for free. You don't want to pay for anything, and then you just have no clue the consequence of that. It's so funny. You just have no clue. The consequence is you're doing business with a company that has your money, and if they're having financial issues, like it's not good. So hopefully everything will settle down. I think it would if the the articles that I'm reading and stuff are talking about 2 days, they need to put the money up for 2 days, then that should start fading, right? It should pretty much start fading pretty soon. I mean, as long as the price stabilizes where it's at for a while, it should kind of be okay. So hopefully that'll be the case. But this is the thing I wonder. I just do wonder about that. And because these would cascade, because if you're it's kind of interesting, the clearinghouse asking them to put up more money. See, because you think about it, like you have to assume, like when you're dealing in stock market and these financial things, you have to assume that like we're dumb and we don't know what's going on, right? That's my assumption. And trust me, that's like, as far as I can figure out, that's probably a reasonable assumption that like, hey, we don't really know half of what's really going on. And so then the question becomes like, why did this clearinghouse like ask them to put up more money? And that's what was happening kind of from what I read about the Lehman and stuff. When that thing went up, it was like, other institutions were like, no, we're not dealing with you anymore. And so they're pulling their money. They're pulling their money from it. And so hopefully that isn't the case. We don't know. We don't know what will happen or won't happen with this. A defined probability that this company will go bankrupt. Because if it happens, it will happen really fast. It'll happen because they'll be like trying to meet the demands. They'll be having to struggle to come up with cash to meet the withdrawals. And, you can't hide that too long. You can't really hide that too long. And as soon as someone's check doesn't clear from someone that closed one of these brokerages, that's when it's going to come out and it's going to be like, oh yeah, you're in trouble. And so hopefully that doesn't happen. But the problem is it tends to cascade, because all of a sudden, if they go bankrupt, think about what happens. They go bankrupt, there's a bunch of cash at clearinghouses. And what you'll find is, like, if you looked at like the financial crisis and you look at the stories of what happened afterwards, like suddenly there's a web of hidden connections between companies and things that you didn't know was there. And that's what the concern is, because what the concern is that this suddenly reveals this tiny little crappy upstart broker could end up causing a cascade of events. So hopefully it doesn't happen, but we're kind of like, Monday is going to be the day. I mean, it would happen quick if it's not going to happen. And so hopefully it doesn't happen. But, I think it's like, when you look at it and when do you get to close your account? I mean, they don't have to really answer account closure stuff till normal business hours, usually, would be my understanding. I mean, they're kind of financial institution banks. All those guys are the same. They're all the same. They're all like, oh, well, you know, they stay open minimum amount of hours by law. So yeah, so that's Monday. Monday will be the day that we'll see if we start getting that. You know, if they start having to report that, oh, yeah, people are closing their accounts, and if that happens, it could very well be game over. So hopefully it's not the case. And remember, this is just speculation. This is not. How do I say this so I don't get sued? I don't want to get sued. This is just, hey, look, this is just my opinion, and this is just my speculation. I don't know anything about the company. I haven't even looked at its. Well, I don't know if it's public. If it's public, I could look at the public data sheet. That's all I could do. But you know, I'm not saying that they are. I'm not saying that they're not. Obviously, they were able to raise some money, so they get some pretty big backers. But we'll see. So I think that's it for this one. Talk to you later. Bye.